Karthik here from Bullsmart Stock Academy. Today, we are going to talk about The Intelligent Investor by Benjamin Graham. With over 1 million copies sold and described by Buffett as one of the best books on investing ever written, let's take 5 key lessons from this book on value investing. The first lesson: learn your mistakes and never give up. Graham lost most of the capital he had built up in the stock market crash of 1929 and the subsequent Great Depression. He learned a hard lesson about risk, but instead of quitting investment, as many would have done, Graham went on to write Security Analysis, which detailed his methods of analyzing and valuing securities. The second lesson that we can take from this book is that investing is not gambling or speculating. Graham achieved his great results at a time when buying stocks was considered to be nothing better than an out-and-out gamble. Yet, he was ultimately able to do so with great returns and low risk. His methods was to object to the widely held view that markets are efficient and instead vow to identify undervalued assets. This is known as value investing or intrinsic value investing. Graham introduced a wonderful analogy of a man called Mr. Market, an irrational chap who kindly offers you a buy and a selling price for your own assets every day. The third lesson that we can learn from this book is minimizing downside risk. Graham always stressed how important it was to buy investment using a margin of safety and buying below true or intrinsic value. This is important because it allows profit on the upside as the market eventually revalues the assets to fair value. The fourth learning from his book is the margin of safety. The key idea of value investing is to buy assets whose price is lower than their true value and then hold those assets until their price returns to their true value, earning a return on investment. Graham stated that his goal was to buy $1 worth of assets for 50 cents, and he managed to achieve exactly that. The fifth and the last lesson that you will learn from his book: see beyond the horizon. In the short term, the market is voting machine. In the long term, it is a weighing machine, Graham said. There are always going to be chicken littles on hand to tell you that the sky is falling and that now is the terrible time to invest. Over the short term, we have no way of knowing what markets will do. Over the long term though, the market will revert to the mean and reflect intrinsic value. In my opinion, this is one of the best books indeed on value investing, and I would recommend all young investors to read this book. For more such videos, to read this book. Channel, तब तक invest करिए, खुश रहिए.